Good morning. Welcome to Stock Market Today, Tuesday, February 26th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Stock ideas in your inbox for you to consider every morning before the market opens. Diving right in now, U.S. equities were mostly higher on Monday, but closed near the low of the day. Early rally faded into the close. Tech, materials, financials, and industrials were among the best performers. Defensive sectors were mostly weaker, while consumer discretionary also lagged. Treasuries were weaker across the curve. Dollar gained against the yen, but lagged against the euro and sterling. Gold lost 20 basis points. WTI crude settled down 3%. Following a tweet from President Trump. Your outperforming sectors: materials, tech, financials, and industrials. Underperformers: REITs, utilities, consumer staples, and consumer discretionary. As we get to the desk this morning, S&P futures are down 20 basis points after U.S. equities finished mostly higher yesterday, as we just discussed, but off the best levels of the day. Asian markets were lower overnight. European markets are mostly lower as well. Treasuries are stronger with some curve steepening. Dollar is lagging both the yen and euro. Gold down 10 basis points. WTI crude flat following that 3% decline yesterday. So here's what we're talking about. Rally into the resistance zone spades. Remember, we've been talking about 2,800 to 2,820 as a resistance zone. Got as high as about 2,813 yesterday and then faded to close, if you look closely, close near the low of the day. Support is in the 2725, 2750 zone, then near 2700. Resistance, we're at it, 2800 to 2820. RSI still in an uptrend, actually ticked back into overbought territory yesterday. Chaikin money flow does remain bullish. So what are we looking at here? We're looking for pullbacks to support. And when we see signs that those support levels are holding, we want to buy bullish and very bullish stocks that have become oversold, especially the ones that are in leading parts of the market. Up here, I think you want to be a little bit more selective. I think if you've had some nice profits on some runs, maybe you want to manage your risk however you choose to do that. You could sell a portion of your position. You could write call options. You could buy put options. The choice is yours. There are a lot of different ways to manage risk, but as we're trading here into a resistance zone and we've become overbought, I think managing risk in the near term makes a lot of sense. Your market in a minute now. What are we talking about in the note to Chaikin Analytics clients today? Well, it's Tuesday. We do relative strength work on Tuesdays, but first we'll talk about the S&P 500 closing near the day's lows. We hit on that already. Low volatility remains leadership despite the rally in stocks. I think that's kind of interesting. We made the call to overweight low volatility names back in the October-November timeframe. That group has outperformed the market, continues to look good. And despite the big rally, the risk-on type rally that we've had, low volatility names traded at an all-time high yesterday. Tech sector showing signs of relative strength. Downside momentum in materials is waning. Futures do point to a slightly lower open, as I said. Power bars on the major indexes, not ton of movement yesterday. Dow up 28 basis points, 6 bullish or very bullish stocks, 3 bearish or very bearish stocks. Not surprising to see the Dow outperform the S&P in light of the fact that the rally was induced by positive commentary about trade with China. S&P 500 adds 16 basis points, 137 bulls, 61 bears. NASDAQ outperforms. 30 bullish or very bullish stocks, 13 are very bearish or very bearish or bearish. And small caps flat on the day, 621 to 278, bulls to bears there. Bonds down ticks and yield slightly higher according to the Chaikin Power Bar. Small cap stocks and large cap stocks remain bullish. Turning now to our stock of the day, Donnelley Financial. Ticker symbol DFIN comes to us from the Computer Software and Services Group. Closed at 1640 yesterday, down 1.4%. Power gauge rating for Donnelley is very bullish due to very attractive financial metrics, strong earnings performance, and positive expert activity. Stock does have some weak technicals, and we'll take a look at that in a moment. DFIN, very bullish stock, strong trend, strong industry group, fishing in the right pond, yes. However, not there yet. Bullish stock, underperforming the market. Dynamic duo not in gear. Market and model not in agreement on this one. Middle of the range on overbought, oversold. Nice bump to money flow as we take out this long-term trend line here. They do report tomorrow morning before the open. So why don't we add this one to a list, watch how earnings play out. I'm not inclined to buy a stock that's underperforming the market, and I'm certainly not inclined to do it the day before they're going to report earnings. But it's certainly one to keep an eye on. Very bullish stocks and strong trends and strong industry groups are what we like to look at as potential long ideas, and then we want to see if the rest of the picture lines up. Very bullish? Yes. Is it outperforming? No. Add it to a watch list if you like. Doesn't fit the bill for me today. Sector movement. Major sectors over the last 5 days. We have been talking ad nauseum about downside momentum waning in materials, and now over the last 5 days, materials are your leading sector. Followed by tech, which is important, and we'll take a look at that one a little bit later, and utilities, which remain defensive. Industrials are another group that we've been harping on for the past couple of weeks in our relative strength work. That's at the top of the list as well. We've been watching real estate as upside momentum there is waning. Staples, I never got excited about Staples all that much. Energy giving some back. Oil traded into resistance. Energy's had a nice run. I don't think I want to chase it here. I want to give it some time to give you some backing and filling before looking at names in the energy sector. Healthcare is the one that concerns me the most, as I think that one is the most vulnerable to further breakdown. But as always, we drill down and look at leading stocks, leading industry groups. So let's look at healthcare services here today, which over the past 6 months has actually underperformed the market by about 3.5%. But the power bar ratio, which measures future potential, is skewed in favor of the bulls. 11 bullish or very bullish stocks, 9 bearish or very bearish stocks. Gets that a rank of number 16 of 21. It has moved down 4 slots over the past week. So notice that as healthcare has seen its relative strength start to fade, its industry groups, while still bullish ratio, has moved down 4 slots over the past week. Some indicative names that are worthwhile to consider: McKesson Corp, MCK, Cardinal Health, CAH, and Providence Services, PRSC. Let's take a look at McKesson here today. McKesson's a very bullish stock, strong trend, strong industry group. Market and model in agreement. Dynamic duo in gear. However, we are not oversold just yet. Money flow is bullish above the long-term trend line. I think as long as McKesson is above $125, it's okay. I'd rather buy it when it's oversold, especially in light of what I just said about healthcare. Starting to fade on a relative basis, and we just showed you that healthcare services has moved down 4 slots over the past week. So I think you can be a little bit more selective here, especially add on market trading into resistance and becoming overbought. You can be selective. Above 125, I like McKesson. I want it when it's oversold. It's going to a bullish watch list. I really would like to get involved with this stock. It's just not there for me yet, especially with the market overbought and especially with healthcare's relative strength acting a little punk. Trending now, yesterday's S&P 500 gainers and losers. On the gainer side of the board, Danaher up 8.5% as it is buying a biotech unit from GE, which is number 2 on the list, up 6.5%. Western Digital, no real company-specific news, but Western Digital highly levered to what goes on in Asia. So to the extent that trade talks are progressing and appear to be positive, investors might interpret that as a positive for Western Digital. Didn't see a ton of news on GT to send that stock up 3.77%. Same with Align, up 3.29%. Not a ton of news there. Notice Align does have a bearish rating, though. So if you own that stock and you get a rally, might be an opportunity to take some off the table. Again, we always want to be managing risk, but we want to be aware of the situation. Market trading into resistance and becoming overbought. If you've got profits in some names that were trading type ideas, not a bad idea to maybe lock some in. HRB down 3.31%. No real news there. Interesting that they are down right in the middle of tax season. TripAdvisor following through to the downside. It's now down 12% since earnings, down 3% yesterday. No real news on Dish. The last two, AAP And AutoZone, similar stocks. AutoZone reports this morning before the open has a neutral rating. AAP down 2.33%, has a bearish rating within Chaikin Analytics. Turning our earnings update now. No real surprises yesterday. After the close today, we're going to hear from bullish rated Mylan. Before the open, as I said, AutoZone reports, as well as SJM. SJM, actually, numbers are already out. That stock is trading higher in the pre-market. AutoZone trading up about 6% in the pre-market as well. Waiting to hear from Macy's as well as Home Depot. DISCA, DISCA, bearish stock before the open. EOG and PSA, bearish stocks after the close. Chaikin suggests caution when holding bearish stocks ahead of earnings. Let's talk now about the charts. Let's look at what we're looking at in our note today to Chaikin Analytics clients. Low volatility, trades to new highs. Why does this worthy of a call out? Because as the market has ripped off these December lows, it's been a very risk-on type market. But there's been some defensive nature to it as, I mean, this is SPLV, S&P 500 low volatility, trading at a new all-time high yesterday. I like low volatility in this environment, just given where the market is relative to resistance, just given where the market is relative to the cycle that we're in. I do like low volatility. We got bullish on low volatility back in the October timeframe. And the stock did a good job of protecting investors. Low volatility protected investors into the lows in December. Now, it's lagged the market since then, but it's still in an uptrend on a relative basis. Now, we are overbought in the near term. I like a pullback to the $50 level, which is solid support to add SPLV to the portfolio, especially as the market is trading into resistance. If we can't get through resistance here, I would expect SPLV to begin to outperform again. Remember, think about your portfolio holistically. Look at what's going on in the marketplace and think about where the trouble spots could be and what you could do to protect. Do I ever think it's a good idea to go all cash or all in? No, that's an extremely difficult decision to make. All right. What I do think is important is rotation into defensive parts of the market when it makes sense, and into aggressive parts of the market when it makes sense. And I think with the S&P here trading into this resistance zone, becoming overbought, rotation into some low volatility to add some defense to your portfolio, I like that idea. Tech leadership is reasserting. Here's XLK, busted through the 200-day moving average. Now it's testing resistance as it's become overbought. Wouldn't be surprised to see a pullback. I want to own tech down here. I want to own the $69 level at the 200-day moving average as support holds. But what's interesting to me is we've broken the downtrend on a relative basis. And I didn't put it on here for fear of crowding the chart. But if you put a 200-day moving average on the ratio of tech to the S&P 500, you'll see that tech is knocking on the door. It's on the verge of a breakthrough. Momentum is with it. Those of you who are Chaikin Analytics subscribers, take a look at my note. We go through it in detail today. Now, I want to watch it on a relative basis. I don't want to chase it here. This candle bothers me. Closed near the low of the day as it traded into resistance, similar to the S&P 500. Also overbought, similar to the S&P 500. I think support levels are likely to hold. So let's not chase. Let's be tactical here. Finally, downside of momentum in materials is waning. We've been talking about it. Here's what that looks like. Here's XLB relative to the SPY. So materials relative to the broader market. Still below the 200-day moving average, so work to do. But since this low here in the October-November timeframe, been grinding sideways. All the while, RSI has been making higher lows. Hasn't busted out to bullish ranges yet. But this tells me that downside momentum in this ratio is waning, and being aggressively underweight materials is probably not the best trade right now. I think that trade is likely to run its course. You want to look for opportunities to cover shorts in materials and then start building a list of names that potentially look interesting to buy. So that's going to wrap it up for today. I just want to say thank you. Thank you to all of you for taking the time out every day to follow along with this show. I will see you back here tomorrow. Have a great Tuesday.